kind of a process. All know about that because it's like we are all going through the turbulent, like after dreamy situation from 2019 to 2020 2021, and we are going through a turbulent situation right now. So everybody should know, and everybody will know that actually it's a risky business. Then this is not a uh, trade advice or any kind of advice. So we want to make sure that actually you are aware of these all things. A lot of risk involved in it, money involved whenever you put together your money to work. The problem is actually there are like a lot of risk, inherent risk associated with this. So all the risk you can consult with your broker. If you have a financial advisor, a personal financial advisor, please consult with them. I am not a financial advisor. I am not any sort of associated financial advisor, or I don't have any certification for financial advising things. So it's like it's a speculative market. So what the random moment, what we are trying to do is actually uh, just understanding the random event and getting getting some sort of uh, like a grip edge in that event. So just I want to make sure this disclaimer is because it is always there. So it's like I'm doing this for a long time. So not only for our community, general community as well. So I put together this is like a risky business. Can we start or wait for one more minute?
We'll just wait for one more minute and start at 9:05.
Yeah, so it's like Tanvi is my timekeeper, so make sure, yeah, just warn me every half an hour, so I'll keep on going. Yes. Yeah, we can start right now. So it's like we don't want to waste time. So I think Tanvi is recording this event. Probably anybody want to see, watch, they can easily go through it. So we'll present end of the two presentation. There will be half an hour or 15 minutes Q&A session, so we can answer most of the questions. Write it down your questions if you have while going through, else you'll forget it. Then you can ask it. If we couldn't answer by in Q&A, what we will do is actually send an email, or in our group discussions we can discuss this later. If you want to send an like a PM private message, you can do that as well. So just I want to let you know that actually everybody's answered most of their concerned questions. So uh, I want to discuss with personal mindset. What is trading? What the business you are in? So knowingly or unknowingly, what kind of business you are in? You have to know the behind the scene and general mindset of the trading business, and what all are the habits associated with it. So just I want to dissect what is trading, what is the components involved with trading. So
Fazal bhai, sorry to interrupt.
Yeah.
There are some few people joined us, so it will be good if you start with your introduction and then
Sure.
we go for the topic. And I would like to welcome everyone, and we'll start the session. Fazal will start the session. And if you have any questions, please post to the chat. And Prem Nasir will join us in the second session, and both of them will answer best of their abilities after the session. Okay, Fazal, you can start.
If you don't know me, my name is Fazal Fazdane. My training is I did my MBA in investment finance, specifically associated with IT as well as business statistics. I am a director of analytics in a public trading company, so I cannot reveal most of the information on that side, because it's like a lot of inside information I'm involved with, because I'm doing a lot of analytics work on that side. So I'm working. I did a project. I was like a full-time trader for 4 years, and in this turbulent situation, I just took a project. They want. I started as a consultant. Then they want me full time over there, so I joined with them in a global analytics team for full time in a public trade company. I did a lot of roles in software development, starting with a software developer, IT management, business side, analytics director. Right now, my skill set is a product development. That is something like logical level and physical level, and product pricing. That's my skill set in analytics. I have vast experience in retail, manufacturing, insurance, and leasing industry. I never intended to get into investment management because there will be there will be restrictions involved. If I am trading, if I am working with an investment firm, I cannot trade myself. So I want to trade myself. That's why I didn't put put my resume in investment finance area. So a lot of people ask me questions why you didn't go to Goldman Sachs or MS, things like that. That this is the reason I didn't want to do this. My specialization is risk management and product development. As I said, the current position, I took an analytics director role in one position until early this year. I was a full-time trader. I was trading since 1998, so it's getting old. Disclaimer: we put together disclaimer. As I said, it's a risky business, so consult with your own financial advisor and your broker regarding the risk. So just make sure you are aware that we will be doing interesting presentations, but no, there is inherent risk involved with it. Going with general mindset, I want to start with a general mindset. Who is doing what? All are the dissections of the trading. So we can start from here. So components of the trading. So trading, as all we know, knowingly or unknowingly, it is 4 parts. Like executor, that's you. If you are doing for yourself or you're doing for your company. And vehicle could be vast right now. So it's like from stocks, futures, options, bonds, cryptos, these all vehicles. There is nothing different about it. It is all price movement. You are taking the risk on that particular vehicle. So whether you are interested in stocks or whether you are interested in crypto, there is no differentiation. The underlying working will be differentiate, but the problem is actually you are doing the same process over and over and over. And process and execution, um, you should have some process when you get in, when you get out. So we can discuss this. So that's a process in every trading. So that you have to key like underline. You have to have a process. You have to have an execution process. So that's we can discuss this in this that in later, and record all the transactions and report to IRS. So this is a whole life cycle of a trade. So from first first person as a you start with some vehicles in a through some process, you execute it, whether buying or selling, then you will be recording that properly and reporting to the government or reporting authorities. So as I said, knowingly or unknowingly, you are in a business of risk management. That's it. So you can say n number of multiple way. You are a crypto trader, you are a long time investor, you are something like that. Whatever it is, what you are in a business of risk management. That's it. So you have to understand your business. That is risk management. So what is your inventory? Cash. Cash is your inventory. Any business, there will be an inventory. Inventory is your cash. What all are the products you are using? You are using promise, means actually if you are buying or selling future or options, that is a promissory note. In a contractual agreement, you will be buying or selling particular underline of that future or option. So what you are selling is a promise, or you are providing a liquidity, means actually you are right away going and buying something like a stock, Tesla, Apple, or something like that. So there will be other party, they want to sell to you, then you are providing a liquidity towards that person or that institution. Vice versa, whether you are selling, other institution is ready to buy, you are providing your underlying stock or whatever futures or any other things you are selling towards that person. You are provide what you are doing is actually you are providing a liquidity. Okay, liquidity. You are not creating anything. You are like doing the same stuff over and over. So you are providing liquidity over there, whether in a promissory note or a stock wise. So that is the underline of this business. And what you have to manage is risk, upside risk, downside risk. If it is a sideways risks. So there are only three type market can go: upside, downside, as well as in sideways. So interesting facts about the market. This is everybody should know about this. This is the fact. You can see. I borrowed from Mark Douglas books. So I condensed in 5 major points. So you have to understand you are in a market, any kind of market. So if you are in a financial option market, future market, crypto market, or any commodity market, anything can happen in the market. Weather can go. It's a binary event. Means actually, if you flip a coin, it can be two-way. It can turn around, head or tail. So it's the same thing, profit or loss. That's it. It's a binary event. So anything can happen. If you are thinking that actually, if you are buying a stock, you are anticipating that stock will go up, but there can several times it can go down as well. So it's like a binary event. That's a fact. You have to know, admit it. Uh, so I want to set the parameters first before getting into the technicals. The second thing is actually you don't need to know what is going to happen next into the market to make money. So means people are a lot of people are thinking that actually, oh, market will go down and I can buy it, and after that it will go up and make money. No, it can go down and going down again. So you don't know where is the bottom is, you don't know where is the top is. So you shouldn't be knowing that, okay, what is going to happen. You can, the prediction, all kind of bells and whistles. You don't have to do that. Make it simple. So that, for that you have to know some knowledge. You have to acquire some knowledge how to do that process. Means actually that's what we are in. You have to know how to trade in upside market. You have to know how to trade in downside market. You have to trade how to you have to know how to trade in sideways market. So it's like a three-dimensional market. Is only three-dimensional. So that you have to know that. You have, if you don't know, learn it. So that's a main topics we have to understand. So that's a second thing about the market. You don't have to wait, or you don't think that I missed the boat or something like that. Anytime market will give opportunity to everybody, like buyers and sellers. I can prove that. I'll go towards that. Actually, let me go to the this particular instance. What we are doing is actually I want to show this chart. What this is actually green is a daily basis upside moment. This is like a 2 point apart of SPX. Okay, and if you look at it, I can go with only 1 year. Okay, go with this year until October. What is happening here? If you look at it, we are thinking that actually market is down, or market is always down and trending down. We know that this year. But when you look at it, the number of up days and number of down days, slight increase in down days in 2022 until October, until yesterday. So when you look at it, some of the down days are more than up days. That's why trend is down. But when you look at it, there are opportunity in both sides. That's what I am saying. You don't have to know that actually, because it's a binary event. If you add one more year, you will see a normal distribution. So same thing, up and down. So if you add up, you will see some of the more green days will be a little bit more than down days. That's why market is uptrending in long run. So when you look at it, I want to show you like every year, add up every year, then I can go until from 1914. I have a data from like 1914 as well. So it's like everything. So there are more days. If you look at like a long run, more days are like a small increment, not a volatile. Market is like up 2 points, 1 points. So I don't know whether you guys remember that, because it's like from 1990 onwards, market is very volatile because of like a machine trading. Machine trading started in 1998, that area, but the institution machine traded in 89 to 90 era. So when you see this as a normal distribution, go back with our screen. Just okay. That's why I'm saying that actually you don't have to know what is going on, uh, what will happen in next in the market to make money. Okay, there are random distribution between wins and losses. That's what we saw that right now. It is like a binary event. Most of the time, it is a random for any given set of variable that define an edge. So some years you can see red days are more than like a greenwood days. That is the edge. So what is edge? Edge is nothing but a higher probability of one thing happening over other. That's it. So I don't know whether you are following my like chat room post. I'll say there are like the probability wise. I will always say that actually there are higher probability go down from here. Uh, I specifically put how much probability, and that we need to understand, analyze it, and understand and analyze it. So that is the edge. That's what we are trying to get here. So if we are building a system or building a thing, that means actually you are trying a small edge on the market of the binary event. So you don't have to spend much time on these kind of things. You can always trade if you have a system built in. And I will say that actually every moment in the market is unique. Means actually if we will be saying that, oh, this market is from 2008 market, but it will be some similarity, but each and every moment in the market is new or unique. So don't think that actually it will repeat the thing. Then I'm big on pattern. So pattern is repeating or something like that. It will not repeat exactly same way. We can see that it will go by some sort of repetition, but a uniqueness of the moment, market moment, is always there. So I want to set this fact before getting into the market, deep dive into the market. We want to make sure everybody understand this. If you don't know, this is my this is like I watch every day these key points. Means actually if you are thinking that you have mastered the market, you are not nobody is mastered in the market, because they mastered in their personality. So that's what I want to say, that actually um, most of the success traders, what they did is actually they know what they will do in a event of crisis by themselves. So that is the key. You learn about yourself. That is the first thing you have to understand. How you will manage risk, what is the risk appetite, and things like that. So the age is not the factor for the risk appetite. We think that actually if you are young, you will have more appetite, risk appetite than experienced people. You never know. I see a lot of like a 30, 40 years experience people, they don't have much appetite of risk. Or vice versa. They are like they can easily put to work within 100,000 and 200,000. They have much appetite than a younger crowd. So it is all personality wise, but no, we are in a risk management business, so we want to manage the risk. So that's what I want to emphasize in this presentation. So as I said, there are a lot of vehicles. It's all correlated. I used to put this correlation chart all the time. This is the market I follow most of the time. S&P 500, Nasdaq 100, Russell 2000, uh, VIX volatility, bonds. I do 10-year bond and 30-year bond as well. Sometimes 15-year bond. And gold market, I always watch that. Oil market, I always watch. And crypto market, in crypto I put together a Bitcoin is the king in crypto, so I put together. So every week I run this correlation, make sure how inter market correlated. So I want to make sure that actually if S&P 500, how S&P 500 is correlated with Bitcoin. It is 82 percentage right now as of yesterday's market. 82 percentage positively correlated with S&P 500. Same thing with Nasdaq. Nasdaq with correlation with Bitcoin is 85 percentage. Russell is with Bitcoin is 81 percentage. So it is very small fraction, but the thing is actually you have to understand this factor to understand intra-market analysis. So that is a macro level. You have to understand that actually intra-level market is very important to see. This is like it's all depends upon your interest, what you are trading. Some people put together wheat, cotton, pork belly, depends upon who you are. Being said, pork belly, that's one of the biggest commodity trading in CME. Don't think that actually like that is Islamic or not Islamic. This is not that area right now. I'm not going through that. That is totally different discussions, whether it is halal or not, haram or something like that. So uh, things like intra market analysis very important, because you have to understand where is the money flowing. Being said that actually where is money flowing, there will be a rotation of the sectors all the time. Some of the sector will be like money is flowing towards the some sectors. Some of them is could be some cash, like right now is the US dollar is very going up because dollar is getting expensive. Means actually interest rate is high. If you put together your money in 15-year bond or 10-year bond, you will easily get 5% without a risk free. That, as I said, interest is halal or haram. That's totally different discussion. But no, I'm talking about the general market. So money flows from one sector to other sector. Um, it is very tough to manage or understand. There are multiple tools out there. I use stockcharts.com to understand money flow. How they are doing is actually they are analyzing volume against SPX. You can set it up SPX, then correlate that with what you are trying to assess. Where is the market money is flowing versus SPX. It is very tough to calculate by yourself. But if you are following 11 sectors of S&P 500, then you will see somewhere like in Finviz, you will see where is the green daily basis, something like that. But if you want accumulated versions, so something like a quadrant of leading, weakening, lagging, improving kind of quadrant. This is how stock charts follow. So it will follow from one sector to other sector, so jump one quadrant to other quadrant. So that could be one way to do it, but as I said, you don't have to know these whole things to make money. That's an important factor. This is all bells and whistles. You can understand it. It is always understand. It is always good to know this kind of information, so you can do deep dive if you want to. You can do that, but you don't have to. So that's what I want to emphasize. This is all sector rotation, market correlation, and things like that. We can put together, but you don't have to. That's what I want to see. So we can what we can do is actually enough talking. We can go to live market. So do you have any stocks you want to assess right now, or just start with any stock? Any like Tanvi? Do you have anything? We can start with anything. Popular stock. So that will, if that helps anybody. So we'll start with Tesla.
Yeah, I was going to say, let's start with Tesla.
Okay. This is like inception to date maximum Tesla chart. This chart, let me see. This chart is from 11 onwards. I think, yeah, 2011 onwards until yesterday. So Tesla was like a slow moving stock until COVID. Then COVID money gets in, people are interested in, people like the people tweet about more stuff on Tesla and getting accumulated in a high level. You like it went from $1 towards $414, and from there it is accumulating. Right now, accumulation and disbursement, we can discuss that later. So what we need is actually we have to know the trend. This is how I analyze a chart. Means actually any stock we can analyze like this. So this is like a monthly basis, inception to date. So when we look at it going up, so it's like from monthly wise, stock is uptrending. That's it. So trend long term is uptrending, but we have to know what is going on right now. So for that, I will put together a support and resistance. We can do something like this. This is a good support. This is a good support and things like that. But if you draw like this, the problem is actually you are assuming your skill sets. Most of the people don't have that skill sets. So what we will do is actually we can put together some sort of a Fibonacci numbers, how that works. Then we can dig deep into the to day level. So first, what I'll do is actually I will put together entire market set, put a Fibonacci level. So you will see right now price is in 208 as a downside, 257 is the upside. That's it's already did for you because with Fibonacci level. Then I will dig deep to the weekly level. So I will try to do that in three-year weekly. See how this is I'm using a Thinkorswim platform from POS. If this is like platform is free, if you open a account with them, you don't have to trade. You just put $100 in their account and you can utilize a multi-million-dollar tool for free. Okay, so that this is a free tool. If you open an account with them, you don't have to trade with them. Okay, just I'm not promoting them, so that's that's why. Um, so while developing this tool, I know the developer who developed this. It was a Chicago-based company, Thinkorswim, and TDA bought. So when they developing, I did a lot of input to develop this beta version of it. So that's why still using. I have a lot of codes, inherent code built into this. So being said that. Tesla, when we look at it, and their subset, when you look from the $1 to 414, it is retraced 50 percentage. Okay, so right now, what you can do, you can see that actually, so like even weekly basis, it is uptrending. So it's like from here, if you look at it, from here to here, it is still uptrending. Okay, it is still uptrending, but it is in between 257 and 208. When we look at short-term trends, weekly basis, that is downtrending from this like last November onwards. It is downtrending. Okay, so that's what we want to understand. So the probability is stock will be there for 257 208 range. That's a one thing we have to keep it in mind. Then understand that actually how you can make money if stock stay between these or something like that. So so we set monthly basis, how like and their data set. Then we dig deep into weekly basis. So that's a second step. Third step is like a yearly and a daily basis. So something like 1 year daily. So when we look at it, the trend, the range what we are talking about, 257 to 208, still intact, but you can see downtrending, but no, it is forming a triangular form. If you look at it, then it broke down and getting into this level and going back. So you have to understand that there are a lot of activity going on this side. So just draw a line over there, then we can make sure that analysis, like I'll put over here or something like here in the trend line. So 231 could be like a 50 percentage of this level, this 257 and 200. And so when we buy from, this is a good support. So this is a support, this is a resistance. There will be people selling in this area. There will be people accumulating in this area. We say then support and resistance. So we just to learn more about support and resistance. So that's how you analyze a stock. Any stock, any stock. If you look at it trend wise, analyze it. This is the trend analysis. Okay. Then if you know, yeah, this is the right time, you can do a lot of cycle analysis. Means actually you can add something like stochastic or something like MACD or something like that, MACD. This is all good tools, but as you know that actually it is all whatever you are doing here. This is all lagging because it's a price level. Price need to happen to trigger this particular indicator. So we can do something like a MACD or some stochastic, however we want to. RSI, we can put MACD and RSI. So just for the sake of demonstrating this. Here, we already learned the trend, okay? And this is the volume by time. So this is like a time-wise volume. So we know that actually every day how much volume is. So volume is picking up or not. We can do that over here. So just keep it in mind. Time-wise volume is there, and price-wise volume is there. So volume can profile in timely manner or pricely manner. So after this we can discuss how to profile this in volume by price. So this is by time, so every day, daily basis volume. The second thing what we need to, so just I want to make sure you can see here, and going towards MACD. Okay, MACD, the rule of MACD is actually you have to cross up to get a buy signal. Okay, now in this case price is in support, but MACD is not crossed above. So when you create a rule set by yourself, depends upon your personality, you can, this is one way to make a system. That's what I am saying. There are 1,000 ways to make systems. So just I am putting together what is the indicators out there. So there are a lot of indicators. So when you look at it, studies and edit, this is not only for Thingorsym. You can see every platform. There are plenty of those. So not only that, actually we can easily create as well. So if you put together, so something like this is mine. So if you put together edit, you can write codes inside. So these whole things you can put if you are a programmer, you know how to program. Easy to create your own indicator, something like that. So the platform is capable to do that. A lot of platforms, free platform, are also capable of doing these kind of things. But while saying that, MACD, when you look at it, MACD, just keep track, Tanvi, keep track the time, please. When you look at the MACD is not crossed above. So that means actually you are in a yellow light right now. It is in price is in support. You are waiting for MACD to confirm it. So once an MACD confirm it, it can go a long way. If it is a trending market, uptrending market. If it is a sideways market, MACD will show up like this. Here, it is a sideways price going in a sideways manner. MACD will show up like that. The upside, like you got the signal, you got the sell signal, you got the buy signal after this is all a part of 2 days. Then you got a sell signal again. So that means it is a sideways market. If you buy and sell, you will lose a lot of money, as well as in the sense of like a brokerage and things like that, instead of doing this. So once it's crossed over, you can buy this Tesla and wait for 231. That is the immediate resistance. So what I will do is actually, if you buy it, then where will be your risk assessment? So if it is going down, where will you be getting out? I do that actually in this lower level of this candle, or the lower level of previous candle. Closed, the price closed lower level of previous candle. Depends upon your risk appetite. Okay. So if you close down, there will be, so something like always price assess on close, not in between the day. if you are trading for like a 3 months to 1 year, things like that. Always end of the day where the price closed. So that's the fact. So once a daily candle closed, then you can see, you can do something like a downside risk, upside risk. So we can see that actually we can profit from 231. So for example, you are buying 10 stocks of Tesla, then if reached 231, then you can sell, you can profit, take a profit of 50 percentage. Depends upon how we want to take profit. There is no problem with taking profit. So it's like use that kind of analysis all the time. So you can easily do something like profit taking. There is no problem to take profit. So always take profit. Then just let your rest ride towards 257 if it is if you can ride it, or it can go down. Then you can assess. Yeah, you can assess it. Make sure if you want to take whole profit, take a whole profit. All the time there is opportunity. So don't hesitate to take profit. You can, how much time it to get in or get out of 10 stocks of like a stocks, or 100 stocks, or 1,000 stocks. It will take only like 2 seconds to maximum minute. That's it. Market is liquid. So don't hesitate to take profit. If you have profit, don't hesitate to take it. Okay, so that's a one indicator. The other indicator is RSI is like a oversold, overbought oscillator. These all are oscillators. So this MACD or RSI, everything is oscillators. So it will oscillate a maximum to by like it's like a pendulum. So price will can go anywhere, but no. So RSI, when it is lower than 30, that means actually in oversold territory. Don't think that actually oversold territory will like trigger into overbought eventually. Eventually it will, but sometimes this oversold can stay for long time as an oversold if price is going down. So you have to watch everything together. This is an example. There are plenty of like instead of MACD, you can do stochastic or any other tools. As I said to you, there are a lot of other tools out there. So you can do a lot of research. As I said, you don't have to know all these things to make money in the market. So that's what I always say to people, because that's like the opportunity is always there. I want to show you the one more thing. Price. This is like a price by volume by time, and the volume by price. I want to show you how the volume by price looks like. Means here you can see in this area, this is like a price level volume. Means actually in this price, most of the like in the 257 and 208 range, most of the volume traded in this particular price, 241.40 price. So means most of the people bought here or sold here. So this is like there is nothing, you cannot assess that it is a buying volume or selling volume. You can assess if price is going up and volume is up, there are more volume to buy or bidding high to get more like get into the position. So there will be bidding high, bidding low. That is driving the price. and that's how you can assess it is a buying volume or selling volume. So if price is going down, then I think from here people bought it, and these old people from here, from here to down, all are underwater right now. So what will happen is actually when price goes up, these people tend, uh, there will be more trend that actually people will sell it because they want to get out from the position. So we have to know which is that price, that is 241 in this range. There is other range in 302 before. In previous range was in 302. Before that is 342. So the major range is 342. The major volume profile range is 342 towards 300, 213, 214 range. So that's the macro level volume profile view. But this is another way to analyze volume by price. Okay, so that I said to you volume. So this is the way we can always assess. We can always assess the risk of the uh, uh, main risk of the stock. Where is the price? So when we look at it, I always say this is the range. You can always look for the price for the range, monthly basis, weekly basis, monthly and daily basis. So start with monthly. Just resume. Start with monthly. Go to big dive to weekly and from to daily. Trend wise, as well as something like support resistance wise, as well as oscillator wise, analyze these whole things. So just to note it down, this whole thing, this is how you can create a system. If this system is not working, then depends upon your personality. This all like MACD is like a Nobel Prize winning indicator. So for this creating this MACD, they got a Nobel Prize. It's $1 million product. So so when you look at it, this is how you can create a system. This is one way to create it. So the process is already set right now. So you know that actually, okay, I got the range of 257, 208 to 257, 208 to 257. That is Tesla's range right now. How that is the information. If you didn't act it, you cannot make money. So when MACD crossed over, you can buy it. Then you can wait for that. That's a one way to do it. Then, as I said, you can step up and step down. You can buy right now 2 stocks towards 10 stock, step by step. So all depends upon your personality. You have to know your personality first to get it done. These whole things. Okay. So next thing I want to see how to monetize this information with some sort of options. What I will say that actually it's like okay, this is the range right now. 208 and 257 is the range of Tesla. If you don't know options, don't dig deep into it, because it's like if you want to learn more stuff about options, you can get the like I'm diving to the advanced options right now. Prem will introduce like a beginning level as well in next presentation. So in this, what I'll do is actually I will put together a risk profile of so 208 and 257. That's a risk profile. So when we look at it, so if we are looking for 208, so the risk profile will be like here 208. Okay, 208 and 257 is upside risk. 2 257. Okay, so when you look at the prices here right now, so you are thinking that 208 will be the lower range and 257 will be the upper range. It is upside skew, so more probability towards upside right now. So how can we create a product here to make, if price is between 208 and 257? That's my question. So there are multiple options to create a product which you can make. Whether stock go down towards 208, you can make money. Stock go towards 257, you can make money. Or stock is in between, sideways, you can make money. So one option is actually, we can see this as a iron condor. That's a like option. If you don't know options, more just it's a new word for you. So you can create product from here, depends upon your scenario. So let us try to create a product. So I'll say that actually I will go with December 22. These are all Tesla options. I'll go with December 16th. And lower level, we said that actually 208 is, so what is, so I'll go with a 205 or even 200. So that's we can leverage some risk towards that. Sell this and buy a five point apart 205. So this is a vertical here, and we are talking about 257. That is the upside, and you can say here 256 or 250 to 255. So I will do sell here and 256 by here. This is called iron condor. Okay, how this looks like in a risk profile, it will be looking like this. So what you are doing is actually you are risking a capital of 357 to make 310. So how many percentage? It's like a 90, more than 90 percentage. So if you can create a from each trade like a 60 to 90 percentage profit, will you be in this business? So that's my question. So any business, from the business community, you can see what is the percentage, most probably 40 percentage or 30 percentage or net profit. In this business, you can create, if you manage appropriately, manage the risk appropriately, you can easily create a product of like this. This is a one product. There are thousands of products like this. Depends upon the scenario. You can come up with an idea of how you want to create product. So you don't have to master only iron condor. You can, if you master only iron condor, all heads will, it is like a hammer. If you have a hammer, all nail head, you show all things we will see as a nail head. Okay, You don't have to do that. You have to understand the situation. Depends upon the situation. You have to associate a product with that. That's how you create a product. It's like I know that actually there are a lot of software engineers in the group, doctors in the group. We will not prescribe say medicine for all fever. That could be from cancer to general COVID to general normal fever. So you have to assess the situation, assess the risk, then prescribe it or put down the product. So this is one way to eliminate risk. Okay, so if you just want to show you how to create a system process, this is the execution part. So execution part is actually create a product according to towards that. It is nothing but two verticals. So that's it. And you are in the selling side. And what you are doing is actually you are selling the time. Basically, you are selling the theta decay of particular product time. So if stock is between this 196 and stock is between 253 before, where is that, before December 22, you can make 310. So this is what like a 100 stocks. So you are managing 100 stock right now, not one stock. For managing 100 stock in a stock wise, how much you want? You want to like 2,000, like 21,000, yeah, $21,400, and you are doing that for $300. And if you put together 10 contract in it, that is a $3,000 product, and you can make at least 50% of the profit. So if it is like if you made profit by November 1,500, close down and open up another one. You know what I'm saying? So it's that's a one way to make the product. So if you have any questions, please write it down. We can discuss this in our Q&A session. So that's how you have to create a system. Then, so just create a system and go towards the analysis and execution side. So I want to emphasize this. Actually, this is all about executor. Who are you? So you have to understand yourselves. It is self-assessment. You have to understand yourself. That's the low profile area in all people do it. You don't know yourself. You don't know everything other than yourself. So just to stop everything, understand yourself first. When you will get emotions, when you will get rash decisions, where you can sleep well, where you cannot sleep well. So that means actually risk appetite and things like that. You have to lay it down, write it down. If you cannot do by yourself, if you have a good friend, buddy, he will tell you what you are. That's easy. If you don't have buddy, there are like a psychologist or like there are like a free sites to assess psychology. There are AI based psychology assessment sites. Go there. They will give you 3 or 4 page of questions. Then they will assess you. So if you are in a bigger corporations, most of the corporations, they do that with their employees. So they can easily categorize it. Once they categorize it, managers will know that actually how to behave towards that person. That's how you manage people right now. So we can set it up the expectation. So it is very important to not let your emotions take over and lead rash decisions, because it's like if you are losing money, then if it is a risk update is far beyond your loss, then what do you the emotions will kick up. Then all the time when market is like you can hear that. Actually I hear this all the time, means actually when I buy it, market will go down. When I sell it, market will go up. Is that seems you? Then analyze it, please. Please analyze by yourself. Don't take rash decisions take over. And exactly how to plan. So we already mentioned how to plan a trade from monthly entire data set towards deep, deep dive into something like a daily basis. And from there, create a product, understand where will be the range, probability range, then create a product according to that. So that will give you a good risk assessment. And stick with your plan. So that's the other plan. You can create all sort of plans, and if you cannot obey that plan, that will create a bigger problem. So I know that actually we can develop a plan. So I was doing a lot of individual consulting. So I create discuss all these things and create a plan for you and let it run. Then if you are not following that plan, what's the point? You are following by XYZ from the YouTube. That will not work. That will not work. So believe in you and work according to that. So create a plan and stick with that plan. And if it is not working, iterate it. Why it is not working, and iterate it to next level. So that's how you create and formulate plan. This is how trade dissection goes. These all tools, bells, whistles, and products, execution, everything together, I weight as that's a 10% of whole entire life cycle. And process and procedures, I'll put 20% weight for that. And individual psychology is 70%. Think about it. You know how Warren Buffett trade. Everybody knows his like a style, execution plan from early stage, like from childhood, from 11-year first trade towards 80-year last trade with Apple and things like that. Everything transaction is recorded. There are a lot of biography for Warren Buffett. And if you can follow the same strategy, process, procedures, tools, and things like that, can we mimic? Anybody is mimicking Warren Buffett right now? Nobody. You cannot. That's individual psychology. Warren Buffett has a team, and he is driving that team. Okay, so individual psychology is they have systems around that, and the people working in the Berkshire, they follow that. The creating process, the fundamental analysis and things like that, they put together that around that Warren's psychology. But individual psychology plays big part. As I said, the portfolio management side. When we look at it, so as always, everybody says diversify. Instead, what I meant by diversify is actually not Google and Apple. And Apple in same sector or same product. It is from the equity. So, instead of doing that, diversify by product means actually something like you have equity, you have something like bonds, you have something like crypto, something like that. Okay, and in the product itself, diversify by industry means actually you are buying from equity from technology sector, some finance sector, some other sectors. In crypto you are buying some DeFi or something other than something like Bitcoin, ETH, any other blockchain area which you are looking for. So if you are like a 20 percentage in Bitcoin crypto, this 20 percentage you have to diversify in like that. Bitcoin will be some heavyweight, or ETH will be heavy weighted, and things like that. From there, you can diversify it by industry level. And strategy level, you can, yeah, you are like doing 30% and 40 percentage buying stock or underlying asset. Then you can diversify the strategy, option strategy, to protect that. Means actually you can do covered call, covered put, and things like merit put and things like that. You can put together iron condor, strangle, straddle, a lot of butterflies, the ratio spreads and things like that. This is all option strategies. So you can diversify by strategy. That's the other way to do the process. And make sure the correlation I show you in previous slide. Make sure you are in non-correlated, not highly correlated products. You are in like a like a 50%, 60% positively correlated products. Then that will help you to diversify. Then how to protect? Always understand your correlation of the your portfolio. That's very important. If you have multiple products staying for long time and short time, just run a correlation. That correlation can be, you have to create it by yourself, or somebody have to create it for you. You can do from Excel to Python to R or any other languages you like, Java or whatever you are comfortable with. Do that. If you don't know programming language, just pay a kid $500. He will do for you. Okay, so that's a way I created. My son created for me, so that's why I'm saying. So he started and I iterated later. So that's a one way. Then how understand the beta weight of your portfolio. Just that's an if it is a new word for you, just to do a research. You can do beta weight in Thinkorswim, Tastyworks, some of the platform, not all the platforms. So what it is doing is actually, if you are holding something like Apple, Spy, or any other products, something like a crypto, futures, all kind of products in your portfolio, you have to correlate that with something. So something like ES futures, like S&P 500 futures. So how much ES future is combined with your portfolio means actually if you add up all the weight of your portfolio and compare that with ES future, what is the correlation between that? So something like your entire portfolio is 2 years future. If you beta weight like that, 2 years future, then if there is a small turmoil, something like a small turbulence comes, like a 2 months turbulence comes in, market is going down, then you can short 2 years future, instead of selling all your portfolio, and you are bought for that long time. If you are doing that, how to protect your portfolio versus your futures, means actually you can better weight your entire portfolio, calculate entire portfolio against you something like a future or ETF, SPY, SPX, or something like that, then short that according to that, so it will mitigate your risk. So if it is like losing $100 from portfolio, you will be gaining $100 from the future. So it will nullify. Or if you want to do more, something like if you have risk appetite, then you sell three future against your two better weight portfolio. So you will get some sort of leverage over there. Um, that's how that's how professionals manage a portfolio. If they have a lot of things to manage for a long time, like most of the portfolio managers, they buy for 5 years towards 10 years, then they either they will sell again sell options against that. That's one way to do that. Or they will better weight the entire portfolio, then sell the futures. Okay, so like we put together like don't think that actually all the like for example ARC, um, she is not dumb. She is making money, but no, her investors are losing money. That's not her problem. So that's that's how portfolio underwriters they care. If it is making money, good and well and good. If it is not making money, I'll make money on that. So that's how she lives. She pays her bill on that. Else, the cash flow will not be there. So if you want to take this profession, risk management as a profession, risk management or trading as a profession, what you want, what is you need uh, for that. First, foremost is a passion. Okay, any other career, you need to have a passion. So money is the byproduct of what you are doing. If you are doing right, money will follow you. If you are doing wrong, it will not. It is money is not creating. So that means actually you are doing something wrong. That's it. So passion is the key, and the other part is actually cash flow management. So cash flow management, you can, if you are doing a business, that's it. So you are doing business means actually you don't have to do trading. If you want to just like this in 2022, you have to step back a little bit, because it's like the market is turbulent. The VIX is high, so market is very turbulent. So what we need is actually we don't have to make sure that we don't have to be in the market. Then how you can make money? Or you have to live. You can live from previous cash, or if there is any other opportunity, take that as a trading or something. Like what I did this year is actually I'm consulting. I'm consulting in my key profession, analytics profession. So they want to create a team. They want to do product management. They want to do forecasting and things like that. I am building a team and doing for them. So consulting is another way to. So cash flow management, you have to flow. Yeah, you have to manage the cash flow. That's it. Any other business, you if you are in one kind of business, don't think that actually you have to do only that. You will do whatever you want to get it done, the cash flow. Okay. Third thing is actually you have to be systematic. You have to follow your rule. And fourth one is trade journal. So you create a trade journal. Then that what that means is actually whatever you are like a starting point, you are getting into a position. For example, from last example, what we do is actually okay, price is in support, MACD crossover is up, and RSI is going up upside. So that's why I'm taking 25% of the position size right now. Write it down there. That will help you in future. If that is not working, then you can journal that actually it is not working, something is wrong, either the environment or my system. Then dig deep into the system and iterate it. Okay, so that's for that trade journal will help you learn from your mistakes. So that's iterating from trade journal. If you want to learn from your mistake, you have to know what is your mistake is, and you want to know what you did on that time. If it is a 3 months trade, probably second month is all made low. So you are in profit all the time. All of a sudden, 2 days volatility comes in, you lose everything. So that is norm in this industry. So you have to understand that and go from there. So learn from your mistake. Need a growing mindset means actually don't be like a stone. Means actually, yeah, I will trade only this. I'm a equity trader. I'm a crypto trader. I will not learn anything. No, you should learn everything. So so it's a growing mindset. Things will change. So something like you don't have to be yeah, my the for example, Bitcoin crypto industry. You know that actually blockchain is very good. That is the future. That is this, that, those. Then the crypto is going down, but people in that industry is being like a stone. Shouldn't be. If like a trade, I always say trade what you see. That's it. Trade what you see. So that growing mindset, you have to be there to get into any kind of trade, any kind of business. It's not only trading, any kind of business. You have to manage your risk and just grow from there. Get rid of your ego. Yeah, that's a one thing. Um, as a Malayali, you learn from your childhood. Most of your parents teach you like parnya vak valigano. That that in this industry that will not happen. Okay? Means actually you will say something today, things will change. You'll be saying totally different tomorrow morning. Okay, so don't stick on your ego. Oh, I already said I cannot change my tone right now, so that person will what that person will think, this person will think. I don't care. So get rid of your ego. Okay, respect the market saying something, you are against the market. That that is a trend changer. Means actually market is saying I'm going down. If you want to get with me, ride with me, you can ride. If you are staying there and thinking that it will come up, you are your own. That's what market saying. And if you can get on board with market, you can make money. Market will reward you. If you don't, market will punish you. That's it. Punishment and reward is same time right now. If you follow, if you respect the market, your market will reward you. That's it. That's the only way to reward in this industry. Ready to change anytime, as I said, ready to change, like a fluid, like water. So it's like a water can form in any format or in any shape. So something like a fluid like water ready to change. So if you have this kind of mindset, you can treat this as your profession, else it will be very tough. So questions will go like, how are we doing by time? I think I have
Uh,
what
we have like 15 more minutes.
minutes. Okay, that's what I thought. So what we can do is actually go like that, and we can do something like some other tool.
I
This
have a suggestion like usually like we have a saying like mega cap stocks are like safe for anything. So what surprised me this year was the chart of Facebook. So if you could elaborate what happened in that, it will be great because it's a mega cap. It's considered as a monopoly. It was like growing insane, and now it's like 20% below like last 5 years. So would like to get an analysis on Meta.
Yep. Okay, so we can start with Meta then. Just keep the time. Make sure I don't want to. Um, because last time it was like we were going and going. Nobody was looking for the time on that time. So as I said, how we analyze Meta. So what we can do is actually we can get all the data set maximum monthly basis. Okay, this is happening right now. Anything can happen in the market. That's the first rule. That's it. Mega cap or small cap or anything like XYZ or anything can happen in any market. Okay, so if you believe in that, then don't think the market is going down. Then what is happening with this market? So what we can do is actually just do a deep dive analysis. What I'll put together as support and resistance. So that's the first thing. So same process for every stock or every crypto or anything like that. So right now price is in between 156 and 94. Okay. So price basically monthly basis broke down from here to here in this chart. Just stick with the maximum downside and right click on it and extend to right. So it will show you where. So instead of drawing, this is one, this tool specific. In Thinkorswim you can do that. Some tools you cannot do these kind of things. So most of the time you can see it is support went up, breakdown. But no, people showed up in 2018, then went up again, grinding up, went down. But no, it is still in 156 range. Went up. There are a lot of volume in April of 2019. From there, it broke up the resistance and sideways went to sideways about 6 7 months. Then from there broke up again in until January, August. Yeah, August of this 2021. Then it is breaking down from there. So it's like a first thing, first breakdown. So that breakdown 3 months candle. So most of the 2 months at least breakdown. So 3 months in 2 months downturn. So everything took down. So from there onwards, it is going down. Now price is in 156 and 94 range, and this range was 2018 range. Okay, so it's supposed to go in this range. We all thought that actually it will stay here in 242 range, and from there it will go up. It is breaking down technically. From there, we can start with weekly basis. So we can deep dive 3 year weekly. So that's one time frame I do. So it's like a pattern forming. So what that pattern is basically, this is a head market, like as the other rule is actually, it is every point is unique. So when you look at it, a pattern weekly basis, a pattern is forming. This is pattern is called head and shoulder pattern. And what is it broke, 3 weeks before, the neckline is already broken. Okay, so this is not a exact pattern of something like if you see the pattern like this, how it will happen is actually most probably if it broke and close. This is like a weekly basis is broke and close. So sometimes it will range in between this range for some time, then it will break down again. So this pattern is a bearish pattern. How we can calculate this is, this is the timeline. So we can put together something like this is the timeline. You can see if it broke here. So probably if you look at it, so let me to the, because I don't have space here. This in this time frame from here to next, it will get into, what it is saying is it will get into this much down. So that's an anticipation. Anything can happen in the market. So let me go towards a monthly basis again, so we can get some space here to wrote it down, please. From here, so from here, what I'll do is actually duplicate it, and probably from here to this, from this time range, means actually in October, by October of next year, it could go to duplicate. It could go towards 59 range. So in 1 year, the price can go towards like a 59, 55, 60 range. Is that possible? Yeah, possible. Probable, I don't know. The probability, we have to look at it. So 59 we are looking at right now. So how you can look at the probability? Probability you can look at like this. There is a probability analysis. 59, so 92, 82, this is January of 23. So right now, February, probability saying by 17 February, by next year February, it will be like there is a probability of getting to 77. So we are talking about October. So it is probable. That is what is the probability? 80% probability. Yeah. So 40% probability, because it's like it is a split. So this is 80, 84. This is like a 40% probability of getting the stock 77 range by March or February or March next year. So by saying that 60% probability is not, 40% is there, then with this volatility, with this environment condition, it can happen. So by October, it could get into 59 range. So that will be something like this range of the support that is in 2013 range. Yeah, once it is there, then people will be there to trade. If they didn't come up with metaverse, that is every company is in metaverse, everybody is doing, instead of Zoom, everybody is Facebook metaverse, all work is getting done in metaverse. If that is happening, then it will go up. Anything can happen in the market, but this is the assumption. This is the assumption. So being said this assumption, how can we make money in this market? So something like, for example, daily 1 year daily basis. If you look at it, these whole drawings are there, and this neckline is broken and it is up there. So when it price get up in number, this area or this around this area or 156 area, you can easily short it. If there are a lot of people are trading, there are a lot more people will be shorting in 156 area. So if then if you look at the volume profile, yeah, without looking at the volume profile, I said that 156, most of the people traded in 156. So 156 is the key position. A lot more people will be trading, selling that in 156 area. So next area is 94 to 156. That's the price range right now. So if there is a 94 range, if price getting into 94 range, you could, probably you can buy it until 156. There is no guarantee, but that is the probability. So in this range, there will be some choppiness. Then if it breaks from 94, there will be next level. Could be something like a 156. What is that? Yeah, 58 to 94, or 15 to 94. 58, what we are saying, if it stop at 58, it will stay in 58 and 94. And right now the position is the fact, see what you trade, what you see is 94 to 156 range. And the market, if market goes up from here, 156 is the resistance, 94 is the support. Okay, got it? Anything? Have 7 more minutes. Good, Tanvi.
Yes. I think if there
Do,
is
do,
any
do I
questions,
disappoint you or?
no.
Yeah.
Faisal
So
bhai,
that,
I
yeah,
answered a few questions there in the chat. You can check it out.
yeah. Tanvi, can you?
Yeah, there was a question from Jishin. Ion Condor, should we wait till the end date or close early? Any suggestions on this? Also, if the price moves towards outside the range, what's the best way to course correct?
Okay, iron condor is as a time-based spread, means actually you can wait until it expire, but I will not. So what I'll do is actually, as I said in Tesla, there is like a 1 foot, for example, in this range is 300 range iron condor. That's what we put together. That iron condor. So it's like let me see risk profile. Tesla. Yeah, this is the risk profile. So maximum profit is 310. The maximum loss will be 357. Okay. So like a 90%. If you this is going for example December. So December is something like how many days? For example, from here, how many days are there for December? 55 days. Okay. So I will put together an iron condor from 60 to 40 days in range. Okay, this is like a 50, happen to be 55 days. And when I close it, when the price time decay kick up from something like a 30 to 20 days. So when it December 22 16 become 30-day apart, then you will see more profit coming as a time decay if price in between this range. Okay, So I will say that my rule is actually, if I get a 50% of profit, I take, redeploy it next 50 months, 50 days. So it will be every 50 days or every 40 days. I will be putting the same kind of, if price range is same. If price range is not same, then I will reassess it, get the price range, um, get it done. If I am doing iron condor, I can do any other things. Okay, next. Any, am I?
Um,
Yeah.
I'll have to ask one more question on behalf of the members. So most of the people join here will be looking for like like swing trades or long investing, like 6 months or 1 year or 2 year. So how important is fundamental analysis to do before you invest into a stock, or like how much you can allocate to a particular stock of your total capital, like that kind of an investing um, question.
Yeah, so it's like total capital wise, this is the risk management process. That you have to decide by yourself how much cash you have. So if you are like a total asset is 300,000 or 1 million, then your investment is in house is major chunk, car is other chunk, and things like that. A disposable, there is a disposable income for investing. That percentage is 100 percentage in the stock market. So that you have to decide that first. How much percentage you can bring that disposable income, bring that towards the stock market. So don't think that actually from this you make $5,000, then you can pay your credit card. So don't think that, because it shouldn't be, it will not work like that. Because if you have take profit, you can, if you have that, you can spend on your credit card, but there is no guarantee in it. Then once you get into the, like for example 50,000 you can spend in equity market. Then if you are interested in crypto and equity, then you have to divide that, like 10 percentage in crypto, 90 percentage in equity market. In 90 percentage, 50-60 percentage will be long term, means actually it should grow long term. So that will be, I prefer SPY, QQQ, so ETFs. So it is already like, if you buy SPY, QQQ, and RUT together, IWM together, that will be like 2,600 stocks covered in out of 3,600 stocks available in the stock market. So major chunk good stocks are there. So if you are doing that, actually you don't have to look for fundamental analysis or anything like that, because they all done by other professionals for you. So I prefer ETF for a starting, for the long term, like a 1 to 5 years kind of plan. If you are trading like a 40 percentage of your asset, if you are going to trade, you can do something like a 3 months trade. So if you are seeing a momentum in something like a Pelton or something like that, then you can stay with that. So being said that, actually Pelton was a star before, now it is not a star. So so when you look at it, so we already mentioned in this area, we already calculated this range and reported to our team, our group members, that actually it is going down. So these all things doing by this kind of analysis, and not from magic. There is no crystal ball for me. It is by analysis, learning how to do these kind of things. Okay, so so momentum trades, you can do that 40 percentage. The momentum trade can include options, other strategies, stock buying and selling, things like that. Okay, anything else?
Okay, thank you. And we'll wrap up with one last question from Amir. I would like to know more about your opinion on REITs. It's
Which one?
REIT, REITs, the real estate one.
Let me look at it. RITS.
REIT.
REIT. Oh, okay.
Yeah.
Real estate investment. Yeah, REIT. I'm not getting. This is like a monthly. So it's like for example, probably this is a ETF. When you look at it, this is like a monthly adjusting ETFs. That's why you'll not get enough data for that. REIT is exactly same analysis what we are doing. If you do analyze by weekly, so monthly if you don't have, you can start with weekly. So 3-year weekly. So what you are seeing is actually we had a lot of buyers in this area until December of 21. Then from there, everybody is distributing. So short term it is going down. So when we look at it, I will say what is the range of this stock is this. It's like 100% right now. It is a lower level, 23 to 21. That is the range. You can see this. This will be chopping around for long term. So any stock there is no like a fundamental analysis or expert opinion or anything like that. I will not do. I will see what is going on. Expert opinion, if there is a good market is thinking that actually that opinion is valid and good, market will show in the price level. So market is a forward thinking mechanism. Means actually market decide to move around 6 months before exactly what is happening. So so right now what is happening is actually market is not showing any price movement. So that means actually 23 it will go to 23 and come back to 21 again. So that's it. So fundamental analysis, I am very poor in fundamental analysis. As I said, I'll let other people do for me. That means actually I'll do for SPY. I will buy SPY or SPX. My trading vehicle is actually SPX, RUT, and something like NDX. So that's three things I trade. Eventually, like in 2020, I did a lot of other stocks as well. But no, normally my bread and butter is these three things. So any analysis when we do this real estate sector, that as long as interest rate is going on, real estate investment will go down, and something like bigger level of corporate real estate is slowing down because every corporate is cutting down their space. We know that. So that's it. That's all I have for REIT.
Okay, thank you. The session 2 will start shortly. We have like
Hey,
one more
Tanvir,
question
I have
from
a question.
Booker.
Yep.
So can you please throw some light on 3x ETF like SQQ and TQQQ?
Okay. This is good. This is like TQQ and SQQ is created for a daily settlement account. Means, so some account cannot short or cannot buy n number of stocks. So Dexerian, I think Dexerian is the ProShares or Dexerian. What they created is actually an ETF, which is a daily settling account of 3 times of QQQ, and the opposite of SQQ is opposite of a short of a Q, or opposite of Q. So something like SQQ. Right now, it is making money because market is going down. So when you look at it, this is like every day it is settling, adjusting, and things like that. Because I will not personally trade it because I know how to create this product myself for myself. So I will do that way instead of buying SQQ or TQQ. So I will not promote this. If it is like a 1 day or 2 day deal, I will I will do that. Why people making money in this product? Because VIX is VIX is high right now. So when you look at it, VIX distribution, last 10 year 2010 to 2022 distribution, VIX is most of the time is in 12 to like a 10 to 16 or 18 range. That is the normal distribution of VIX. What is VIX right now? VIX is about 29 right now. So it's like a VIX is in this range. That is the lower level. So if VIX going towards this product all will lose money. So I want to show another chart of this for the entire data set, because I don't know whether you are noticing this. SQQ right now making money. So where it came from? So if it is adjusted price onwards, what is going on? It should be 500 and something like am I reading right? 524,000 dollar product. If you are splitting, adjusting all adjustment in accountable, right now it is $28. It went to $54 product. Same thing with TQQ. So when you look at it, these products are made like this. It is daily adjusting products. So don't trade too much on this, because when VIX comes to this range, this is the major chunk of the range. This product will lose money.
I have a question on the TQQ chart.
Yep.
So let's say like if we buy TQQ at $1 in 2011, does that mean in 2021 at the peak 91 we 90x our money, or it's just adjusted price in the stock?
It is the your stock will diminish. Means actually you created 100, you bought 100. Eventually it will shrink. Your stock shrink, price increase. So that's how they adjust it. So you will not get $91, but no, sort of you will get at least 80, 80 range. Yeah, but no, you will be going through a lot of turbulence on that time. It will, you know that one who trade this TQQ or SQQ, you know that how fast it will decrease or increase the price. So I think instead of doing that, why don't you buy one QQQ or two QQQ, something like that.
Okay, thank you.
This is like a 1 day product, 1 day or 2 day, maximum 1 week. If like in this time range, I want to show you one something like this. This is what is going on in the market under the hood. Means actually this is like a last 5 days. This is like a daily basis. The volume is that there was like in this like a 17th market was a booming high, then something like went down 2 days, again Friday went up. So this is the market, this is what going on. So that's why when you trade TQQ or SQQ, you will lose money if you didn't close appropriate time. Timing the market is very tough game. Don't time the market. Okay.
Thank you.
Anything else?
We are wrapping up the first session. So I would like to thank you, Fasal Bhai, for taking your time and effort for coming this session. And you are always there for the community and for our group members. We really appreciate your time and thank
No
you once
problem.
again.
Yep. You can jot down all the questions you have. We can easily answer in our group, or send PM me. I can answer it as well. So, or call me. So easy to call.